Hey traders, Mark here. Today is Monday, April 16th. I'm back. Well, guys, I took some time off, much needed, frankly. I've been honestly working myself to the bone, and um, man, there's only so much that people can handle, right? And so I honestly just got really burned out and decided to just shut down for a while and focus on the startup stuff for a bit and focus on spending time with the family. And I still kept up with my normal trade logging, and I just scaled back the amount of time I was putting into all of this because it was driving me a little crazy. But anyway, guys, just kind of getting back into full swing here, and I want to show you guys a couple things. So, first of all, this action we've had in the market lately has it's been a little challenging. You see, this is a pretty big drawdown week, and then followed by a couple losing weeks in a row here. This is on Thinkorswim. Ninja, no different. Had a couple back-to-back losing weeks, guys. That's two tough weeks, right? Anyway, so when I'm logging these trades, I kind of get a feeling for how I would emotionally handle trading a system live. Okay, and just to be honest with you guys, this would be really difficult. There's some very dramatic swings in the equity curve. I've seen 40% down days. I've seen 60% up days. So when I see that, what I start thinking is, could I trade that? And the answer for me personally is probably not. And that's just me being completely honest with you. As you all know, I've also been focusing on some swing trading stuff, and I really like the swing trading. And the other thing that I started playing with was, how do I slow this down? Because these zones are very telling. But when I'm trading something like a 105 tick chart, you get a ton of zones and a ton of trading opportunities. So if we look at today's action, you can see, look at all the zones in here, right? There's just a ton of zones. Now I try to slow it down with the trend indicator, but you still get a lot of trades. Now compare this to this. Same philosophy. It's just a little bit different, right? What I've done is I have slowed down the way that the zones come in. And still using the trend indicator. The white zones are my sell zones. The black zones are the buy zones. Now, this buy zone right here is an existing buy zone, so as you all know, I don't pay attention to those. I wait for the market to open, which was right here, and then I wait for a zone to print. Now, here's what's really nice about this style. Before I was shooting for a 1, risking 1 to make 5, almost 6, just shy of 6. Well, on this, I'm able to achieve much higher risk reward, risking 1 to make 8. Now, what am I doing? Well, I'm using the trend indicator down here, and if I have both time frames going in the same direction, then I wait for a move into this zone, and then I wait for this indicator here to go above 80. So what that's doing for me is it's telling me, okay, I've got bearish trend on higher time frames. I'm in a sell zone, and I'm oversold. So I have a handful of things in my favor. And so this would be my entry bar, and you easily get your 8-to-1 target. Now, would I take trades against the trend? Yes. The only way I would do that is if I had divergence on this guy down here, okay? That's the only way I would do that. And I need at least one of these to be in the direction that I'm going to trade with the divergence. So if we look at today's action, yeah, nice move here. We never set up in this one. This is an old zone, so I would not count that. Here's another zone. Now I am bullish and bullish here, and I am below 20, so I would take this trade. There you easily got your 8-to-1 risk reward. Now here's another thing that I am doing. If let's just hypothetically say that price doesn't set up here, or the trade doesn't set up here. This zone prints, then this zone prints, and it doesn't set up in this zone. I won't take this third zone. It's just too overextended by that point, so I won't take that. But that's not the case here. This would have been your trade. And so you can see, guys, here it is already 11 o'clock. I've only had, what, 2 trades? Yeah. I mean, that is much more manageable, gang, right? And then here we go. So look at this. So I've got a green and a red. So I remember I need to be above 80, and I have to add divergence. So I'm not above 80 here. I go above 80 right here. And I go red and red. So I would take the trade here, and I'd be stopped out. I would take it again here and stopped out, and then I would take it again here. So that would be what? That's 4. This is the 5th trade of the day, and then you get your move down. So you'd have 3 winners so far. You're already at 2:30 now in the afternoon. I would need a reset, so I would not be trading in here because I just took a trade. Now I am back below right here, but I don't have divergence yet. And then I get to this area where I'm white, I'm no longer green, so there'd be no trade, because remember I need one of them to be in my favor, so there's no trade there, and then that's the end of the day. So you can see on this day where on using the original strategy did okay, it had a small win for the day. It took 12 trades. This one had less than half of that and made a lot more money. And I could go back and show you numerous examples of this working in action.